Giving to charity feels good, and there's even a financial benefit. You can deduct any charitable donations from your taxable income. However, there are many rules that govern these donations. Cash gifts are handled differently than non cash gifts, and different rules apply depending upon the amount of the donation. Hi there, I'm Nisha, and I create videos to help women over 50 take control of their finances and build a brighter financial future. Whether you're just getting started or looking to improve your financial strategy, you're in the right place. First, I want to say don't create other bills and expenses just to lower your taxes. Be strategic in how you spend money to keep your money for yourself. Tax laws can be complicated no matter what age you are, but you can easily find out the details for everything you need to know with some online research or from your local tax professional. Instead of creating unnecessary expenses in hopes of reducing your taxable income, focus on strategic spending that aligns with your long term financial goals. For instance, consider investing in assets that not only provide tax advantages but also appreciate over time, such as real estate or certain retirement accounts like a Roth IRA. By funneling money into these areas, you're simply reducing your tax liability. You're also building a more secure financial future. This approach ensures that every dollar spent or invested is purposeful and contributes to your overall wealth building strategy. It's also crucial to stay informed about the latest tax laws and changes. Tax legislation can shift rapidly, sometimes offering new incentives or closing existing loopholes. Regularly consulting with a skilled tax professional or utilizing reputable online resources ensures that you remain aware of any changes that could impact your financial planning. Additionally, understanding the nuances of the tax code can open up opportunities for deductions or credits you might not have previously considered, such as those related to energy efficient home improvements or educational expenses. Now, check out these tips to ensure you're getting the most out of your charitable donations. Number one, ensure the organization qualifies before claiming a tax deduction. For example, contributions made to political candidates or to a specific person are not deductible. There's a process an organization goes through to acquire the proper status with the IRS and become qualified. Any organization you contribute to financially can provide information about their status regarding tax deductions. Number two, if you're donating anything other than cash, the value is claimed at the fair market value. These values would be similar to what you would pay if you bought something at a thrift store or yard sale. Look at the prices on Craigslist. Those are typically fair market values. There are also special rules when you're donating a vehicle. Number three, maintain accurate records. A receipt is an excellent way to keep track of your donations. In lieu of a receipt, your own banking records are also sufficient. For any amounts over $250, it's best to have both a receipt and a banking record. Number four, reduce your deduction by any value you receive. If you're receiving any benefit from your donation, like tickets to a sporting event, you're required to subtract that amount from your donation when claiming a deduction on your taxes. For example, if you donate $500 but benefit by receiving free carpet cleaning worth $200, your tax deduction would be $300. Number 5, contributions above certain amounts have different rules. A single donation of 250 or more has certain reporting rules. Another set of rules, primarily an appraisal by an expert, comes into play when the amount is 5,000 or more. If you're making non-cash donations that total of 500 or more, there are other rules. See the IRS for more information on that. Number 6, consider giving assets that have already appreciated. Gifts of stocks, for example, that have appreciated in value have an added benefit. You get to deduct the full value and you're not taxed on the capital gains since you didn't benefit from it. The extra money comes off of your taxes and goes directly to the charity. Everyone wins except the IRS. Number 7, you can deduct your costs for helping the charity too. You can deduct mileage and any other out of pocket expenses related to any direct service you provide to a charity. This can include parking, tolls, travel expenses, lodging, and food. Proceed with caution when you're claiming these types of deductions. The IRS tends to scrutinize anyone who takes advantage of this opportunity. Honesty is the best policy. Number 8, the limit is 20%. You can certainly give away every last cent of your charitable organization of your choice. However, your charitable tax deductions are limited to 20% of your adjusted gross income, but you might be able to carry over excessive contributions to the following tax year. See a tax expert if your contributions exceed this limit. There are many other great causes that could use your support, and it feels wonderful to be able to help them. It's even better when you can reduce your tax burden in the process. Use these tips to claim the tax deductions you deserve. Remember, it's all about taking small steps to create big changes. If you have any questions or need more guidance, feel free to reach out. You can email me directly at info@westonfinancialservices.com for more personalized advice or to share your thoughts on this video. I'd love to hear from you. Be sure to comment below and to like and subscribe. As always, I'm cheering for you. Until next time, take care.